So inflation, and this is the inflation story in the US. Uh, and we know very well that the last print was over 8%, which is a 40-year high. And the components in the table next to that, kind of indicate what the drivers are of how they got to 8%. And next slide, please. So from this inflation shock, we're going towards a policy shock in the sense of what the U.S. central bank, the Federal Reserve, will have to do, is being forced to do, to try and arrest and tame inflation. And forced to do really is really more aggressive policies than what we've seen before. Again, very, very loose, very kind of supportive of growth policies, historic low interest rates in the US. But the exit used to be very gradual to try and support the recovery globally, not just in the US. But with inflation at a 40-year high in the US, they've kind of 180-degreed that, and now will have to really catch up and be very, very aggressive. The red line in this chart is the inflation story that you saw, but going back to 1992, really. But the green line, the dashed green line, is this rapid catch up in interest rates from from historic low levels. So that's the policy shock that global markets are trying to deal with now. And again, turbulence in financial markets as we started the year in the first quarter of the year.